Hi everyone, I'm Bagadon at StockMarketCaddy.com. Today is August 30th at 2018, and we're going to make this YouTube video hopefully less than 10 minutes. And the subject is going to be about really the Federal Reserve and what's going on in the world with money flows and whatnot. So if you've ever had an interest or want to get a better understanding, we're going to give you our perspective. We welcome, constructive, criticisms and what have you. Now, the one thing that I do want to say, we trade for a living day in and day out. And what the Federal Reserve is doing or the money flows from day to day doesn't really have that much impact on our trading day in and day out because we are machine traders, algorithmic traders, and whoever is trying to influence the markets, whether it be the Federal Reserve, whether it be Trump, whether it have been Obama, it doesn't matter. We hope and trust and put our faith in our algorithms and in our systems to pick up and protect us and to profit from those abnormal movements in the market. Now, when it comes to the monetary policy of the Federal Reserve and even economics, we see economics as a false science, a pseudo science. So I apologize to those who may have spent years at MIT or in college studying what we think is quackery. We really do. Now, the monetary policy, though, is quite real. And what I just have drawn out here to give you an example, the Federal Reserve as a central bank for the U.S. and really the central bank of the world, and there are other central banks. There's the ECB, the European Central Bank. There is the Bank of Japan. There's the Bank of China, the Russian. Not every country. These countries don't have, unfortunately for them, they don't have their own central bank. So their currencies are hugely impacted by other movements of our central banks. So, but what happened in 2008 when we went into that recession that we had, and it was kind of a world recession, what the Federal Reserve did or launched with their QE, namely Bernanke, was to counterfeit, or to conjure, to create dollars, paper dollars. And they literally created trillions and trillions of dollars. And they flooded the world, not just here in the United States, they flooded the world with all American dollars. And they loaned them out at very, very cheap rates, and the interest rates were coming down. So the whole schematic. This is like a third grade explanation, okay? But it's pretty much on point. So they flood all the world with the American dollars, and for the last 8 or 9 years, everybody's been fat and happy. In this, we could have had somebody in Turkey with a lemonade stand, making millions of dollars, and there could have been businesses in Argentina or in Venezuela or even that maybe should not have even been in business, weren't fundamentally or economically sound, but because the money flow was so rich, everybody flooded. There are a lot of, and that's one of the things that happens, that the Federal Reserve rationalizes in their own mind that in their attempt to try to stimulate world growth, right? You want to have growth. There may be some companies that stay in business that shouldn't be. So they did all this, and now, though we're kind of reaching the upper limits, this bull market, this growth, hyper growth for the last 10 years is reaching the, we believe, or the Federal Reserve is at least indicating reaching its upper limits. So what happens is the Federal Reserve hasn't even yet embarked on this. but they have alerted the world that they're not going to be doing the QE. That's all. They've just alerted them they're not going to be. And they're just around the fringes beginning to increase interest rates a little bit. So what happens is when they're distributing dollars around the world, the value of the dollar goes down. And when they do that, these other countries like Brazil and Turkey and Argentina and Venezuela, their currencies go up in value. And that's good and stimulative for those countries. And so those countries go into debt. I mean, the businesses go into debt because they think, let the good time roll. They're borrowing these, cheap American dollars and to get themselves into debt and supposedly, have all this growth. Well, that's all well and good during the expansion phase, but during this phase where he's going to be increasing rates and not distributing the dollars, what happens is the dollar goes up in value. The dollar goes up in value. The currencies in these worlds, and it is their world, in these countries will begin to go down in value, go down. And what happens is they start having, raging inflation. We hear about Venezuela, costing millions and millions of whatever their currency is, to buy toilet paper. In Argentina, the peso is crashing, and in Turkey, I think it's the lira. Well, I forget what the currency term is. Doesn't matter. It's their paper money is just crashing. In Brazil, crashing. So what these countries will do is they don't have their own central bank, but they will, in an attempt to defend their own currency, they will begin to, if they have dollars in reserve, they will begin to sell those dollars and buy back their currency, trying to defend their currency. They will also try to increase their interest rate as high as in Argentina, the interest rate is 60%, trying to attract more dollars into the country, trying to defend their currency. Now, who pays that interest rate? Well, Argentina then reaches out to something called the IMF, which is basically 50% is us, if not more, and try to get a loan, but they're never going to pay it back, to pay the interest over the next couple of years just to stabilize the country. So it's like going from one Ponzi scheme to another. But this is what's beginning to happen right here and right now, real time, as the Federal Reserve hasn't even begun to pull back the dollars yet when they increase the rates. And they are going to continue to increase the rates. These currencies are going to be in real trouble. These countries are going to be in real trouble. The reason why you don't hear about Italy, Portugal, Spain, Ireland, France, these countries would be in the same boat, but they were protected by the ECB, the European Central Bank. But those countries, rest assured, have issues and can put huge pressure on the European Central Bank. I really should have another circle here. And what can happen is the contagion. There are counterparties. These people borrowed money, and they may have borrowed money like Turkey from Germany, which is going to be part of the ECB, or even Spain may have borrowed money. And when they borrow money, just like anything else, and they can't pay it back, that counterparty can't pay back the other counterparty and the other counterparty and the other counterparty. And what happens is during this, and we're just starting it, if you don't think, that anyone in the world in the past 10 years has made any mal or bad investments, then we'll be fine. But if you think that some people may have done some bad things with leveraged money, and it's going to be exposed, we're going to get to see who's swimming naked, then there could be a financial crisis that could pop up quickly and offer some contagion. And when that happens, money becomes very, very tight, very, very illiquid, and people get into a risk-off mode, which could and has in the past had a direct impact on our markets. So I wanted to put this little video out. It's a little 10 minutes. We're talking almost an elementary education, some very basics. There's a little bit more to it than that. There's some great books out there, Currency Wars, The Fed by DiMartino. There's another one by Nomi Prinz about the banks. David Stockman, The Great Defamation. Wonderful books. The Creature from Jekyll Island, that'll go into much, much more detail. But in a 10-minute YouTube video, this is, the game that's played. And so everyone is so concentrated on the markets here in the States. For us, what Amazon does on a day-to-day basis is really a distraction to the bigger game. If all the markets, or you hear the phrase, a rising tide will raise all boats and a lowering tide will lower all boats. So, what's going on with Roku or what's going on even with Apple is really a distraction to the bigger game. Because if in the bigger game, the Federal Reserve has done something that they can't control and the dollar really begins to spike, and our own interest rates have to begin to spike, because what these people will be trying to do, if they're selling dollars and raising their interest rates, the inflation that they currently have in their country, they are trying to export it back here to us. Now, the Federal Reserve, at least publicly, is not saying there's much inflation, but we have it. In the Federal Reserve, the one thing that they're not going to want to settle for is these countries exporting their inflation back to us. So now, it just comes to pay up time. So the Federal Reserve is really, in our view, we're coming to the Rubicon. It's an important river crossing, and they can't let the dollar be weakened, or we will have that raging inflation. So they're going to the dollar. You want to keep an eye on the dollar, and the dollar, we think, over time is going to strengthen. And the faster it strengthens, it runs the risk that there could be a fast breakdown in equity markets, a fast move from risk off. And all these countries, their markets are down 20-30%. They're going to stay down. Our markets in the U.S. have been diverging. We think there's going to be a fast catch-up, and we think it's coming soon. So good luck. If you like this sort of thing, feel free to follow us. We don't put it out day in and day out, or pages and pages of dissertation with footnotes and whatnot. But there's some great books out there, and we are algorithmic traders. We don't give specific buys and sells, and I say we. It's we consider ourselves a private club and a mentoring site to help others all over the world to try to develop their own game. We don't use moving averages. Moving averages don't work, but a lot of our stuff is proprietary. No long-term commitments. No thousands and thousands of dollars. You join month to month, and if it works for you, great. If it doesn't, there's no problem. Very, very rarely do we ever lose anyone. We just try to help people trade and maneuver the markets. But if you want to get a better, a little fundamental, better understanding of what all this is at a macro level, we wanted to offer up this little video. Okay, so good luck. Feel free to check us out on Bag of Don, stockmarketcaddy.com.